All right, let's dive right in. We've all heard those amazing stories about investments that deliver, absolutely incredible returns. But how often do you really get to peek behind the curtain and see why an analyst thinks a specific company could be one of them? Well, today, that's exactly what we're going to do. We're breaking down a really fascinating report about a company in India's solar sector that one analyst believes has some serious, massive potential. So, let's pull back that curtain and see what they're seeing.
First things first, let's get our key terms straight. The report keeps calling this company a potential multi-bagger. So what does that even mean? Simply put, it's the holy grail for an investor. It's a stock that doesn't just grow a little bit, it multiplies in value, potentially turning a pretty modest investment into a huge win. It is a very bold claim, and it really sets the stage for the high-stakes analysis we're about to get into.
So the claim is on the table. And this report isn't just based on a hunch or some wishful thinking. It lays out a very specific case built on big industry trends, the company's own plans, and, of course, the hard numbers. Our job here is to kind of act like investigators, to unpack all that evidence piece by piece and really understand the logic behind this incredibly bold call.
Now, the analyst's argument starts with the really big picture. Before we even start talking about Vikram Solar itself, we have to understand the world it's living in. And in this case, we're not talking about a gentle breeze. This is more like a powerful structural tailwind pushing the whole industry forward.
And this is the number right at the heart of that tailwind, 500 gigawatts. That is India's massive renewable energy target for 2030. When a government sets a goal of that ambitious, it creates this powerful current that can lift all the boats in an industry. It basically signals long-term support and a market that is just set up to grow for years and years to come.
And if we dive a little deeper, you can see where the real sweet spot is for this industry. Out of that huge 500 gigawatt target, a massive 280 gigawatts is supposed to come from solar alone. Just look at the difference on this chart between where we are now and where that target is. That enormous gap, well, that's the playground for solar companies over the next decade.
Okay, so we've established a massive market opportunity. Got it. But the real question is, how is this one specific company, Vikram Solar, getting ready to capture a piece of that pie? This brings us to the absolute core of the analyst's thesis, the company's own incredibly aggressive plans for expansion.
And the scale of their bet is just staggering. The company's planning to go from 4.5 gigawatts of capacity all the way up to 17.5 by 2027. This isn't just a small little step. We're talking about a nearly four-fold increase. It's a massive power-up designed to make them one of the undisputed giants in Indian solar manufacturing.
Of course, an expansion of that size doesn't come cheap. The report points to the investment required, 6,000 crore rupees. This number is absolutely crucial because it represents both sides of the coin, the huge potential and the huge risk. It's the fuel for all that future growth, but it's also a major financial commitment that has to be managed perfectly.
So the ambition is there, right? But how does all that translate into actual performance? Well, the report argues that the proof is already starting to show up in the financials. So let's dig into the numbers game.
Okay, so check this out. Sales are up 80% year over year. That's already pretty impressive. But look at the net profit. It's up 5.8 times this. This is what analysts get really excited about. It signals powerful operating leverage. Think of it this way. Once their basic factory costs are covered, every extra sale they make becomes way more profitable. It's this profit acceleration that analysts are looking for in a potential multi-bagger.
So then there's the question of valuation. A common way to see if a stock is expensive is the price-to-earnings, or PE ratio. The analysis points out that Vikram Solar is trading at a multiple of about 47, while its competitors are up in the 50 to 70 range. So the argument here is that despite its really strong growth, the stock might actually be trading at a relative discount compared to the rest of the sector.
Now, so far it all sounds pretty good, right? But no credible analysis is complete without taking a hard look at what could go wrong. Any story of high growth and high reward always comes with high risk. So the report rightly shifts gears to give us a crucial reality check and look at some potential red flags. And this is a big one that analysts always watch out for. 30% of the shares held by the company's founders or promoters are pledged. You can basically think of this as them using their shares as collateral to get a loan. Now, this can be a red flag because if those promoters run into financial trouble, the lenders could be forced to sell those shares on the open market, and that can put some serious downward pressure on the stock price.
And it doesn't stop there. Beyond the share pledging, the report flags a few other key challenges.
That huge capital expenditure we talked about, well, that carries a lot of debt risk. The solar industry is also famously price sensitive, which means profit margins can get squeezed really easily. And of course, there's always intense global competition, especially from the big, established players in China.
So, after laying out this huge opportunity, the company's aggressive plans, the strong financials, and then the very real risks, how does the analyst tie it all together? What's the final verdict when all the evidence is on the scale?
This quote from the report really captures the essence of the whole argument. The analyst believes that despite all those short-term risks, the long-term trend is just undeniable. The global shift to clean energy is seen as this massive structural change, not just a temporary boom, and that provides a powerful foundation for sustained growth. And here's where the rubber really meets the road. Based on the belief that the company's earnings will grow rapidly and that the stock will eventually trade more in line with its peers, the analysis projects a potential journey from its current price of around 330 rupees to a target range of 1,200 to 1,500 rupees over the next few years. That right there is the multi-bagger potential put into numbers.
So there you have it, an absolutely electrifying case for a company riding a powerful green wave. The analysis paints this picture of a potential solar giant in the making, but it also doesn't shy away from the serious risks. Which really leaves us with the core question. In a race this big, with stakes this high, what's going to matter more? The unstoppable tailwind of the market, or a single company's ability to flawlessly execute a super high-risk plan? That, my friends, is the billion-dollar bet.